The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Friday edition. This is the March 28th edition. I got one more day to go for the end of the month. That's Monday. Very interesting days. The spikes to the upside, when they've occurred, have been so powerful. It takes seconds to get to a plus 100 in the Dow these days, and then towards the end of the day, it gives it up. I'm not sure about giving up very much today. I'll explain why in a few moments, but let's just go to, well, first of all, thank you. We had at 9 o'clock, Steve Rhodes kick us off. Great show for an hour, 9 o'clock till 10. Tom Ryan came on 10 o'clock till 11. Great show. Hopefully I'm going to do my best here and have a terrific show for you. 11 o'clock till 12. Then you got Nico and Paige at noon. And you've got Daryl, you've got Dave, you've got Tom back again. I have to tell you, this is an interesting session for a number of reasons. But before I forget, because it's real easy with all the different things that are going on, just to forget to mention it. If you go to the front page of TFNN, I think this is it right here. Let me just, right there. Front page of TFNN. Within another 55 minutes, you're going to have Andy Heck giving you a 3-hour online course. Andy just does fabulous work in terms of the commodities, knowing which commodities to be looking at, why, the wherefores, the hows, the tradability, etc. Should be a great 3 hours. I'm going to do a week from tomorrow here in the Boston area. I'm going to be doing a Master Trader series. It's for those people who have traded using the Chapman Wave methodology, those people who understand a good bit of the methodology. Those who have read my CD introducing the Chapman Wave methodology, who have done my webinars. I'm going to spend a lot of time in this live webinar at Babson Executive Conference Center in Wellesley, Mass. A week from tomorrow, you can go to the front page of TFN and sign up. I have to tell you, the more work I've done on this, the more clarity and synthesis of so many ideas. This is what I love. I said years ago that what I love about teaching is that you learn so much. And that's been the process as I've gone through the different charts, producing the core curriculum for the session, which you will get. You'll get it out as a handout. And, of course, you'll be free to ask me any questions. There are a whole bunch of bonuses that go with it. But most importantly, I'm going to be going through certain techniques where, yes, you do need to know the concept of higher peaks and lower troughs. You need to know that we're going to go to a peak D. And you need to know some of those technical aspects that I like to talk about. But this is really going to be putting together in a format that I'm synthesizing as I'm going through it. But I'm hoping that it's a format that gives clarity to certain technical configurations within the technical tools that I'm choosing. It's going to introduce a couple of new concepts. One concept is something that I've worked on for a long time. I've never really talked about it as an official public concept, and it's what I call the one-to-one expansion. It's a Chapman Wave time and price expansion. I wonder if I can get there now. No, I don't think so. I'll try to do it during the break. And what it does is it gives you either the time or the price from a left side straight line move, and then a pullback. That's A to B equals B to C. No, A to B, and then you get your B to C. Then the C to D is equal to that trend line, but the difference is that I'm not using verticality. I'm using diagonality. I'm using the diagonals. And therefore, I get a time lapse as well as a price lapse. and we're going to be seeing how that pans out and how it works. I showed one this morning. I wonder if I've got it here. I sent it in my opening call. I sent it out this morning. There it is. I did exactly the same thing. The first one was early this morning. This is the E-minis on the 2-minute chart, going from a low of at 242 this morning, on the 28th. It went to a peak D, pulls back, so that's A to B, then it pulls back, holds the 200-period exponential moving average, and then it goes C to D in the structure of this lightning bolt. And that gives you very close to the D. It didn't work out exactly, but this one did. Great trade right here. Look, this low on the 2-minute chart. Now, these could be monthly charts because I'll be showing you very long-term monthly charts to do that. So let me just do this. You've got 1843.75 at 24 minutes past 7 this morning, and it went to a perfect peak E just 2 bars after that. Let me just do the first one. We went to peak C, a pullback, and then that low bar becomes the start of the next one, and it went almost to the price point. It went, instead of 1847.65, or you don't get, it's called a 66. That's the actual price. That's not the trade. You can't trade in 0.666. It has to be in quarters. It went a tad high. It went to 1847.75. Peak E, and then it pulled back very sharply, all the way back down again. So that's a technique that I'm going to show you how you can learn to use, a bunch of other things as well. So now let's just quickly look at the numbers. The up 17.75 in the E-minis, the S&P. 1834 was the low yesterday. Today's high so far, and we're almost there, is 1859.50. We're trading at 1857.75. And in the 120-minute chart, now this is what I'm also going to discuss. When can you use a phantom C, the phantom peak? Well, I like to be a little ahead of the game. When I look at the move in the stochastic and the move in the price, those two parallel highs of 1847.50 at 6 o'clock, and then at 8 o'clock, you got the 2-hour chart. You got 1847.50 again. I'm going to, just to be safe, I'm calling that a gray C, a phantom peak, and therefore we're in a phantom D right now. I'll also make that gray so that we know that this is not the real thing, that if there is a pullback after this and it's very shallow and then we go to a new high for another leg up, that new leg up will be the real D. But this is preparing me to say, hey, nice move. You've covered, you're covered, shot right through the 200-period exponential moving average at 1851. That's tremendous support on the day. And now I'm looking to see what happens as you hit this trend line. The only reason I want to do it is I've got this trend line resistance in the daily chart. So this is preparation. If you're long, all you need to do is make it stop a little tighter on one of your positions. But it's saying just be a little careful here because on the very shorter term, there should be a pullback. So I'm going to be watching that. Now, when I spoke about a rotational market, the reason why I haven't really talked about being a full-blown bear, although that's not to say we don't take short positions, and some of them have worked out very well. One in particular has been absolutely fabulous. But that's not the issue. The real issue is this rotational market. I mean, what I mentioned yesterday is how come on a day like yesterday, which looked like unchanged close everywhere, wait a minute, you had a sharp pullback. The IBB could not get out of its own way yesterday. Surely that was the day it should have rallied. But you know what? I think the fund managers are going to go right up until sometime Monday, maybe even a little bit Tuesday, to keep getting out, to show that they are now out of most, not most, but a chunk of their biotech stocks has been taken off. And now we're looking at what? We're looking at the IBB, even today, struggling. Another reason why I didn't want to go long is I'm rather staying our short position from up at the 271s. 275.40 was the all-time high. And yesterday's low was 228. That's 50 points, almost 50 points. Today, the high was 238.54. It's trading right now at 236.35. Just cannot get that energy to the upside. So it's a rotational market. A bear market sees the volatility index start to climb into the high 16s and keep going higher, making higher highs, higher lows. It says that bad news starts to be taken seriously in the market. So it's a rotational market. And now let me just get back to, go to the front page of TFNN. Let me see if I've got the right page up here. That's going to be my page right there. Basil Chapman, Master Trader Series Level 2. And it explains all the different instructions, the U-shaped pattern, the obvious ones that I always go through. It's going to cover briefly, but in quite a succinct fashion, the webinar that I did a week from Thursday night, that was on the MACD and the slow stochastic. I'll be covering that in context of what we're looking at right now. What I love about these particular webinars and Master Trader Series full day sessions is that I usually try to time them so that they are coinciding with really important periods. And then what I do is I show what chart patterns are you going to be looking at over the next 3-4 weeks that tell you that the trend has changed and why you should be looking at a particular direction. Let me show you a good, I didn't finish the story. Dow's up 125 at 16,389. The S&P is up, let me check, updated, up 15.5 at 1864. The comp index is up 37 at 3592. And that's the contractors. Comp index is up 43 at 41.94. Gold is down 20 cents. It was down a little bit more. You know, Fridays is usually tough for gold at 12.94. I just see gold trying to find some kind of a base. Maybe early next week there could be a tradable bounce. I'm not sure yet. Up 13 cents at 19.84 in silver. Platinum is up at 14.02, up 4 points. High-grade copper is back over 3. It's at 3.04, up 5 today. Let me just quickly check that out. So this is high-grade copper, HG. Nice move in the 120-minute chart. Oh, I got that fixed. Remember, I had a problem yesterday. Thank you, Dave, over at TradeStation. I love simple resolutions. I don't even know how that happened, but it happened. I couldn't actually see the prices. Couldn't get my pointer to show the prices. Wow, nice move in copper. Hey, good. This is leg B in the daily with a nice U-turn. Great candle. Now, 3.09 is going to be the challenge on the continuous contract is a 3.04, making some kind of a a kind of a U-shaped bottoming process in the, this is going to have to be watched really closely in the monthly chart. All right, so I've said that. Now let's go on. We've got bonds down 28.30 seconds at 133.11. What's interesting is that there was a break to the upside in the TLT. We're making a peak B. It has to be a peak B. With 108.77 is very important support. At 109.26 down 73 cents. Says that by Monday or Tuesday, if there's a turnaround and you take out 110.39, that will start leg C up and it'll be very positive for the weekly chart because it's in leg B. So bond monthly is up in leg A. Just real quickly, we're going to go to the dollar. The dollar is just kind of stuck here. It's holding okay, but it hasn't really done anything. We'll be back with Kevin from Sterling, Massachusetts, straight after this break. Dow's up on 23. S&P's up 15.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, and just checking up. Yep, that's another one, so that's an ER. All right. So let's go to our first caller. We've got Kevin in Sterling, Massachusetts. Hi, Kevin. How are you?
Hey, Basil. How are you doing?
Very well, thank you.
That's good. That's good. I just got your newsletter this week. I just started it, so I've been kind of, walking my way through it. So it's been interesting and a lot of material. You have to give you credit on that. There's a lot of good stuff.
Thank you very much. And if you have any questions, just email me. Then I'll as soon as I can, I always send back a quick reply or a chart if there's something that you're looking at. So thank you very much for testing out my service, and I do appreciate that. You'd like to look at?
It's Exelon, EXC.
Trading at $32.99, up 17 cents, and it is Exelon Core. I remember ages ago doing this chart. Wow, it was in a big move up. It was back in 2006, 7, 8 that had a spectacular move, and I could never. It's one of those that sounds like an engineering firm, or an energy firm. What does it do?
It's basically an energy. It's hydroelectrical, electrical power.
Oh, okay.
Nuclear. They got problems when when the nuclear reactors. In Japan.
Oh,
so they have quite a few of those.
Yeah.
But, it seems
some of that's coming back to me now. I remember this was one. So this was one of those companies. Mm-hmm. So do you have a position in this?
Yeah, I've sort of. Unfortunately, I kind of dollar cost averaged in. So Right about now at $30, I'm just making something, so I'm tempted to get out of it.
Okay, let me just go through this process. This is Technical Friday, and on Technical Friday, I want to take the time sometimes when I get a call and I can note a sense of strain. Let's just talk this through, because one of the things I'm going to be doing in my Master Trader series in Wellesley a week from Saturday is I'm going to talk about the psychology a lot more. I often touch on it, and I'm not a psychologist, but certainly I'm a psychologist of the market because I've been around so long. And one of the things that I sense in your voice is that you got in, and then you dollar cost. Did you dollar cost average, or did you just add to the position thinking that you would then dollar cost average if it ran up?
No, I kind of figured, different positions I got in, and then because it does pay a dividend,
right.
That's, one of the other reasons I got into it, and so it's more of it was for, this was for longer term investment, or but it unfortunately didn't, and so right now, I guess that's the answer, right? I think I answered that right.
Okay, so, that's what I wanted to go through. I wanted you to be able to talk it out with someone, and I also wanted to find out whether I should scold you, like I sometimes scold myself for doing something dumb, or whether I'm listening to someone who had some conviction in the stock and just placed orders as it was coming down, and then it went down a little further than you thought. That kind of confused you, and now you're saying to yourself, geez, I don't want to go through that again. See, that's very different. But if you still think that the core aspect for you to go into the position initially is still there because you believe in the company, then I'm going to say to you on a purely technical basis, while it's just a tad, I've got it in alternate wave count right now of E/C, and the reason why I've got an alternate count, everything about the last low on the 7th of July, if you use my technique, you would just automatically count a peak from the low that was made on the 3rd of January at 26.45. Folks, we're looking at EXC, 32.91. I want to spend a little time on this because this is a very attractive looking chart, and it had a gap up the other day, and it's holding the gap. That says there's veracity for the move. But if you were just really strict about my methodology, what you would have done is gone from that low and counted peak A. That's on the 10th of January at 27.59. Peak B is on the 24th of January at 29.16. The next high was peak C right here on February the 3rd at 29.40. Then you go to a peak D at 29.88 on the 6th of February. It pulls back for 4 days underneath the 9-period moving average, and then it takes another 2 days, and the third day it breaks out. I did this. I put a down arrow and an up arrow because it held the 9-period moving average so well, but at the same time, now that I'm looking at it a little closer, I'm going to change that, which I can do, because we've got enough time in that the prices continued higher and are still holding well. So I always say, in the Chapman Wave methodology, the most important thing is to get as correctly as you think it is the last letter, because that's what you're going to base everything on. So have you got a moment?
Sure, yeah, I can say, yep.
Okay, good. I've got Kevin online, installing messaging.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we're back, and we're looking at, whoa, what did I do? I just lost that. Give me 1 second here. Get it back, EXC. There you are. We're back, and we are live. So, Kevin, this is what I'm looking at. I did some work during the break, and I just wanted to explain to you just a very simple peak, A, B, C, D, E, F, because this MACD fast-moving average held all the way through, makes that a peak F with a down move on the 24th of February. Pulls back in like a lightning rod A, up B and down. So this is trough A, B, C. Now it starts a brand new move, and it's gone to leg C today with a fractional 1 penny high over the 33.03 high of the 25th. Today it went to 33.04. That starts leg C. I suspect it will go to D. Now I'm going to suggest 2 things. One is that you are back to a tad of comfortability. What I do when I'm wrong, and I've done it a few times this week, when if I'm trading the futures and I just get busy with something else, I just completely forget about it. And sometimes I've forgotten to put a stop or a buy stop in or a sell signal in. If it goes against me, but I feel absolutely confident that it's going to get back, I let it get back. And the moment it gets back to even, I am out. And then I will click to add back to that position if I see it's freshly in a buy mode or a sell mode. Why? Because I say, I was wrong. If I planned on it, that's one thing. But if I didn't plan on it and it comes back, I don't mess around with the trading gods. They are there and they are watching you all the time. That's your conscience. So what I do is I say, at least some part of your position now should have a much tighter stop. Maybe the 1/3, maybe the last 1/3 that you bought. You can choose which third it is, just for tax reasons or whatever it is. But I would say that if it pulls back, it's a 32.84. If it pulls back under 31.50, I take something off. Just something. I wouldn't take the whole thing off. I think the chart's looking really good. I love the weekly. It's a tad vertical, so it says it could go sideways. But I'm going to suggest this. That's what I would say in terms of your positions under 31.84, something like that. I just take a little bit off. One of the thirds I take off. Now, the other thing is, if you're able to and you're around, call me next week, Tuesday or Wednesday. Let's look at it again, because that's going to be the crucial period when maybe it's made a D and now it's starting to pull back. That's when I must assess it and say, you know what, now there might be a time for a greater pullback, so take a little more off, but plan that you want to put it back somewhere between 31.75 and 30.70. I'll name the numbers that I think would be very good support. That's what I'm thinking. It looks great right now. Let's give it a few days. And if you can you give me a call maybe midweek?
Yeah, definitely. Yes, I can call you next week. No problem.
Great. So Tuesday or Wednesday, let's look at it again.
And I'm gonna try
congratulations
to watch your,
for holding and being determined. I think that the monthly chart is improving. The weekly chart looks much, much better. I think it's a nice position that you've got. I would say 1/3 must 1/3 because of the psychology involved. You've got to take it off if it breaks one of those support levels. Okay. Thanks for calling. I appreciate that.
Okay, take care. I'm going to watch your webinar tonight.
Oh, fabulous. That's good. I really appreciate that. Oh, and any questions you have, just send me an email.
Okay,
Thanks so much for calling. I appreciate that. And that was Kevin in Sterling, Mass. Let's go to Garo. We're going right across the country, 3,000 miles to Newport Beach, California. Garo, how are you?
Very good. And you, sir?
I'm very well, thank you. I'm getting even better now that I think we're turning the corner because the weather is a little warmer today, but not very warm, but a little warmer than it was. So you got what?
Good. I have URI,
United Rentals Inc. Let me just say that it's trading at 92.34, up $1.51, made a peak G in the Chapman wave on the 21st of March. It's a leg F, and today could be a peak F in the weekly and a leg E in the monthly. Now, the only thing I want to say before you go any further, because I'm going to ask you your position, is that the daily the technicals are very weak. The weekly chart, MACD, is very strong, but the technicals in the weekly are saying, hey, be careful. You could easily slip down to 87, 81, and that if you couldn't rally strongly this week, which is a very important week in the weekly chart, then there's a good chance that if you, at any point, Yuri takes out 87 support, goes to 85, that really will be a peak F in the weekly. So now I'm going to say to you, what have you done?
Nothing. I've been buying and selling this since January, and it now is in a position that is too far from its 200 days.
Yes.
And it's too far away from the 50 days. And is this a shortable stock? It's very strong, very, very strong. I usually don't short anything below its 50-day. Is this still? Is there's ways to go higher, or is time to short it?
I would suggest two things. One is, from the daily chart, I'm going to go step by step. I wasn't able to do the, let me just check this out. So this is an A, B, C, D. So we've got the 120-minute chart in a sell mode with a bounce unfolding. And that says that the 94.23 high at 11:30 on the 26th is really that's key to me. A close above that, and I say, whoa, be careful. There's a chance you could go a little higher. My suspicion is that it's going to fail and make an arch formation, and it's going to come down, and within 5 to 7 sessions, it's going to take out the 89.70 low of yesterday. And if it does that, I'm looking at the support at 88.50 to 88.60 as being really important. So your question is, should I be shorting it? And my answer is, I'd have only two, not three, but two positions. One is I'd short it right now at 92.33, but a small position. If it takes out the high of today, Monday or Tuesday, I would have another short, and that short has that short. Let me see which one. Yeah, the second short would have a stop of 94.24, and the first one, I would, because it's a smaller position, it's the one you'd start right now with a smaller position. I would say at 92.37. Give this one 3 points, but give the other one it'll only be 1 3/4 or something like that, much less. So a short right here at 92.31.
Yes.
And if it breaks down by the end of the day, if it goes to 91.90, that's a good sign. Yes. If it holds at 92.31 to 92.55 or higher, I'd say, okay, be prepared that Monday could have another bit of a pop. I think this is making a U-turn in the daily, and that's going to impact the weekly. I have a leg F in the daily, but there really could be an instant restart, an unconventional instant restart in the Chapman wave. My thinking right now is that there are enough signs that I'm looking at to say that the internal energy is starting to fizzle out. So that's my recommendation.
Right. That's all I wanted to hear.
Okay, so good luck with this one, and let's keep in touch and see what happens.
Very good. Thank you. Bye-bye.
Thank you very much. And I was waiting for a while, folks, for this to get to the peak E, and then it went E, and then it held the 9 EMA, went to F, went to this G, very unusual, and now it's saying that was a struggle, and I need to consolidate. If at worst, it's just a consolidation. If you're short, at best, you'll see a break underneath that 88.60 level. Hey, let's go to Ronald in Fairfield, Connecticut. Hi, Ronald. Do we have Ron? Who's in Fairfield, Connecticut?
How are you today, Chappell?
Yes. Who am I speaking with? Ronald?
Could you hear me?
Yes, I can hear you. Can you hear me?
Yes.
Okay, good. And so you got a question?
GE. What's a good entry point on GE?
Now, this, from your tone of your voice, you're looking at GE, but you're saying, what's a good entry point? Because I'm looking at it as a more intermediate term buy and hold.
No, I sold my position because of Tom. He thinks it's going to go to 21. So I want to see what you have to say, see if you have a different idea than Tom.
Okay, so this is very interesting on GE. First of all, GE has been acting okay in the weekly chart, but it really hasn't been very strong at all. Now, this is very interesting because it's the very quick. I don't know, you probably don't know much about my Chapman wave methodology when I talk about a very quick peak A to B to C to D. Well, that means that it's gone to higher highs in a very quick succession. It's gone A, that was on the 18th of March. It goes to B on the 21st of March. On the 26th of March, it goes to C, and today's leg D. So far, it's acting quite well. So you are now out of GE. What I'm going to suggest to you is that over the next, if you're out of it, I don't really advise going in and then going out.
I've been out of GE, Chappell. I've sold it, and I didn't want to sell it, and all it did was go up.
Okay, so now it's go. All right, so but you're out of it, correct?
It just seems like Tom doesn't like GE, and
well, I don't know about. I wasn't there. I wasn't listening to what Tom said about GE. Let me do this. I'm going to make a suggestion. I don't really like it when people go in and out of stocks, but I'm going to make a suggestion here that whatever position you sold in GE, surprisingly, is acting quite well at this particular point, but I am expecting a bit of a pullback next week. If GE pulls back and it starts to make 25.65 to 25.45 support, that's going to make the weekly chart, it's going to really help. If at any point in the next 3 to 5 sessions, GE turns around, it breaks 25.14, that's very negative because then it's the weekly chart. So it's funny because it's within a point on the downside, if it had a pullback, of really being very negative, and it's on the point on the upside that if it breaks above 26.10, I have to tell you that all of a sudden GE is starting to look like it's struggling, but it's actually holding well. So I'm going to make a suggestion. Think about it. Don't act on it right away. But I'm going to say, here's my suggestion. You've sold your GE, but I'm going to make the suggestion that says...
Yeah, a lot lower.
I'm sorry, what?
Lower, Chapel.
I couldn't hear your first word. It was what?
I sold it lower than it is now. I didn't like selling it.
Okay. So here's my experience, that if you sell something and it continues going up, you were long and you sold it and it keeps going up, but you didn't make the decision, somebody else made the decision. It sits in your head. But here's what I'm going to recommend. Think about it. You don't have to do it. I'm going to recommend you buy GE right now at $25.89, but you can only buy a very, very small portion, and I'll explain why. That small portion is going to keep you in the trade. It's in leg D. I think it's going to pull back. It might hold 25.64. If it holds 25.64 by Wednesday or Thursday of next week, it hasn't broken that, you're in the trade, and I'm going to suggest to you that you might add a little bit more. But if for any reason it starts to pull back under 25.50, then I'm going to say to you, you don't want that. So either you can buy just a little bit now, or you're going to have to wait for the pullback. But right now it's acting okay, but it's in this very quick, I can't explain to you on the air, but it's made a very quick peak A, B, C, D off the 200-period moving average. It's above the 9-period moving average. It's actually acting quite well. The stochastic that I use is not good. The MACD is much better, but the price is holding, and that weekly chart is improving slowly. That's why I'm saying maybe you want to just get back a little bit with a stop of maybe 50 cents. That's all. I don't think that's a big deal. And it's going to keep you in the trade. It's going to make you look at GE a little differently, and you'll at least feel that you have some control over what you're doing. This way you're out of it. If it goes up, you're just going to watch it. And if it goes down, you say, oh, actually, that was a good call. But I think you like GE, and I would like you just to have a little bit. So 25 shares, I don't think that's such a big deal. And in that position, you're going to get a real good feel. If the market pulls back today and only closes up 65 points in the Dow, up 7 points in the S&P, and GE is holding above 25.82, it's at 25.89, that's good action. Do you understand what I'm saying?
I had a ton of shares in GE, and there's no way I'm going to buy any back right now, no matter what you say.
So you had how many?
There's no way I'm going to buy GE right now.
I'm saying, how many shares did you have?
5,000.
Oh, you see, okay. Well, first of all, I would not, when you're listening to someone else, I would scale out. I'd say, hey, I respect that person, but I'm going to only take a little bit off. So maybe that's a little bit of a lesson that you've learned. But at the same time, you know what? Leave it for now. Let's look. Can you call me again Wednesday of next week, and we'll have a much better idea of what GE is doing. And if it's holding very well, we might say get back at least half your position. And if it's starting to fail, I'm just going to say to you, you know what? You're out of it. It's a good thing you're out of it. But right now, I think it's holding well, but I am expecting a pullback by Monday afternoon, Tuesday. Hope that helps you a little bit, Ronald.
Thanks for your help.
Okay. I hope to speak to you next week. Let's look at it again. I'll be back with Steve in Boston straight after this.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back. And let's see. We've got Steve in Boston. Hi, Steve. How are you?
Basil, it was a pleasure meeting you at the IBD group in Boston.
Oh, great! Yeah, I remember that. That was I love being with that group. It's very interesting. Actually, that's where we spent a lot of time looking at the IBB as being toppy. So, Steve, you'd like to look at what?
Well, I'm already short HIMAX and MU. I called you about MU a while back, and those shorts are doing quite well.
Good.
I was interested in going short the Qs. I saw that the comp itself had come up to the resistance downtrend line in my chart that I've been following, around 4,200 today. And what do you think about adding a position here?
So you already have a short position, right?
Well, I went into shorting the two stocks, the two semiconductors.
Yes.
But I was looking at adding a larger position, shorting the Qs themselves.
Okay, so two things that I'm looking at right now that are very important in the Qs is number one, the IBB affected the trading tremendously in the S&P and the QQQ series because there are so many stocks within that group. And even today, the IBB is, oh my goodness, it's down $1.16 again at 234. So I'm suspecting that the selling could go into Monday, the end of the month, maybe even a bit of Tuesday. At that point, there could be another rally, a bounce. And if the IBB has a pretty decent bounce, it's pretty oversold, it will help the Qs. So I'm looking at the Qs, and I'd say the best opportunity to short the Qs probably has gone by. But if it bounced between 88.34 and 88.72, then I consider that that's the area that I'd want to short it. I'm just looking at risk reward. That's not to say it couldn't keep going down, but risk reward, I've got the 120-minute chart saying, hey, I feel like bouncing to the 88.48 level. The day is young. Let's see what can happen. And all the time I'm looking at it, I'm getting the impression that the short side is a little bit worn out in the Qs and maybe a little bit in the S&P, but definitely more so in the Qs. So why don't you wait a little bit and wait for a bounce, and then you'll have a much better opportunity just in terms of risk reward. But the 88.35 to the 88.73 area is where I would start. I wouldn't get the full position. I'd start there, and then I'd work my way as it makes an arch formation. So I hope that helps you.
It does. I was wondering also about the VXX.
Yeah. So
it's got
in the
kind
VXX,
of an arc formation to it, and it's at the bottom of the arc today.
Yeah, I'm getting it right now. The VXX is holding very well. This is the IPAN S&P 500 VIX short term. It's holding well. I'd say if the VXX slides to the 43.20 to the 42.80 area, that means that the market's going to have a much better a bounce next week, early next week. So I'm suggesting that if you do anything with the VXX, you can just start a very small position, and maybe the TVIX is a better one, just a small position, something like that, and it's just the beginning position, because we are getting kind of oversold in many areas. There's this rotation going on, and I just think that you want to be a little bit cautious here, in that the best opportunity would be if. Well, we've had the spike today. Just a nibble on the VXX. That's what I would say. And I'm going to go into it in more detail probably on Monday when I discuss it on my show.
I have a target for 19 as my out on the MU. Do you think that's reasonable?
MU right now, 19. Yeah, well, I have a target right now. If it continues turning around like it's done at this moment, I'd say 20.64. That's the level, the left side low of the week of the 10th of January. Hey, congratulations. Great move on this particular one. Thank you for calling, Steve. I've got to run.
Okay.
Have a great weekend. Mason in Denver. Sorry I couldn't.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.